scenario might help explain the issue. Assume the insured has a $1 million primary policy and a $1 million excess. The primary general liability is effective from 3/1/23 to 3/1/24. The excess term is 7/1/23 to 7/1/24. On March 23rd of 2015, a customer is injured on the insured's premises when she steps into a hole in the parking lot. She required multiple surgeries on her broken leg and lengthy hospital stay. She's awarded $300,000. On May 1st, a small child fell out a window from the second-story apartment. The safety guard on the window was loose, allowing the child to fall through the window. The child lived but severely injured. The child was awarded $500,000 for his injuries. On September 1st, a resident is bitten by a pit bull, which were banned dogs in the complex but had lax enforcement. He's awarded $400,000. In this case, it's easy to see that the 9/1 claim will cause the primary policy to reach the primary policy aggregate, leaving the excess policy to cover $200,000. But what would happen if the primary policy and the excess policy weren't concurrent? As discussed above, it is typically a requirement of the excess policy for the aggregate limits on the primary to have been unimpaired. No claims payments made prior to the excess policy inception. In this situation, the primary policy had already been impaired in the tune of $800,000 before we even get to the 9/1/23 claim. Since the inception of the excess policy, 7/1 took place after the impairment to the primary policy. The excess insurer will deny coverage until the insured has first paid the amount of the impairment. In this example, with a $400,000 claim on 9/1, the primary policy would go ahead and pick up $200,000 worth of coverage, thus reaching $1 million general aggregate. But after that, the insured would be forced to cover the other $200,000. In fact, should any future claims arise between 9/1 and 7/1, the insured would be forced to cover those two, up to $600,000. And why? Because the primary and excess policies weren't concurrent, and the excess policy was impaired on underlying to the tune of $800K, $200K already paid in the 9/1 claim. But $600K impairment remains would be the insured's liability. While non-concurrency manuscripts endorsements do exist, they're not something we see umbrella carriers use often, if at all. Excess umbrella carriers do not want to be dropping down below the attachment of required underlying limits.